The real estate market is in for a real treat. You came here for the truth, so let me unveil that for you. Look around the US and you will see the prices rising. The 1-year price change percent by metro area, October and November. In a 1-month span, you have seen prices, for the most part, increasing. Look at San Francisco as a perfect example. Not in all cases, of course, but we are witnessing a time in which prices have risen to such an astronomical level. Look at how far Seattle has come over this period of time. This is not sustainable levels of growth. But of course, it's all being sustained thanks to the Federal Reserve and super low interest rates. But something has changed. We are now at the level back into 2014 for the average 30-year fixed mortgage rate. This is very high when you look at the levels that, let's say, we were at a few years ago. This is not sustainable. It's closing in on 4.5%. The average person cannot afford 4.5% of a mortgage rate. It's simply not possible. And they will be felt as time goes on. You're going to see more people needing to refinance, and they're simply going to walk away. I would say anytime after 5%, it's just too high for the average individual. They're very, very cash strapped. The amount of debt that they're holding is just too great, and that will unfortunately break their backs. Looking at the Hussman version of the CAPE, okay, the cyclically adjusted PE ratios, well, he's using margin adjusted in this case. This normalizes the denominator of the Shiller CAPE for variation in its embedded profit margin, showing you here, and lo and behold, the market has never been higher. Never been higher, even 1929. The market is so overvalued, and there are so many indicators to show that, but people just say, well, look at the stock market's price in 1929. Look at the stock market's price today. You're an idiot, you're a fool. Then they say, look at the price of the S&P in the year 2000. And look at the price today. You're an idiot. That's what they say. And it just makes me scratch my head sometimes. Anyway. Now, the new infrastructure plan that's being proposed here is something that, we're talking about 1.5 trillion when you include the 200 billion of federal grants. We're going even beyond this. And the amount of money that's being used here, 1.5 trillion, 200 billion, you're looking at a number that it can't be paid for. But, I will say, I would rather have 1.5 trillion in public works projects than 1.5 trillion Federal Reserve printed notes handed off the banks, given CEO bonuses and all that business. But is this the way to really fix things? That you're just going to create $1.5 trillion of public works? I don't know. I don't think this is a solution to the problem that the U.S. is experiencing right now. I know we have to get people working. That is important. But the U.S. is undergoing major problems, and the government needs to shrink. There's so much bloat. Look at all these alphabet agencies that need to be slashed in half, at the minimum in half. I'd be in favor of that if they said, let's slash the NSA by half. Absolutely. If that's all we're willing to get for now, sure, slash it in half. Maybe that $4 billion, building that they set up. I don't even know if you would call it a building. It's practically a city. It's so massive. It costs so much money. But that is needed because of what exists behind the system. They need to protect their system, and they're doing so using these alphabet agencies. That's where the real bloat is. So that's all for this video. Just wanted to do a very quick one. I hope you found it informative. If you did, give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. Check them out at the links in the description of this video. Take care.